if you've been working with somebody for a really long time, you're not 100% sure that everything is optimized, you just want a second pair of eyes on it, I'm more than happy to give a second look to anyone of what they have going on. I am a fiduciary, so I've got nothing to sell. If you're doing everything right, I'll tell you that you're doing everything right. But I would say at least once every 5 to 10 years, get a health check, get a sanity check. The same way sometimes you get a second opinion from a different doctor. Get a second opinion on your finances, especially if you've been doing the same thing with the same person for a long time.
Introducing The Vixen Voice, a podcast for ambitious women entrepreneurs ready to move into their feminine essence, live their truth, and unlock their full potential. I'm your host, April Roberts, and each week I'll be interviewing inspiring women who decided to take a leap of faith to pursue their dream. Women who believe that they were born for something bigger. Hey there, just popping in quickly. It's April Roberts, and I wanted to thank you for being a loyal listener of the Vixen Voice. It means so much to me. And because of that, we're going to be popping in these little announcements because I want you to be the first to know what's going on at the Vixen Gathering. So if you haven't done so yet, click the link below and check out the Vixen Founders Collective. The members who are already in are raving, and we would love to have you join us in the ultimate business consulting, networking, and personal growth community for Gen X female founders. See you there. Hi, and welcome back to another episode of the Vixen Voice. Today's episode is near and dear to my heart because, as you may or may not know, I was a financial advisor for 16 years before doing this and grew my own practice. And so it's my honor today to have Veronica Karas here with us, and we're going to be talking all things money. We might even talk about some dirty little secrets that high-performing women have in their financial house. So Veronica is a trusted financial architect, totally love that, for high net worth women, specializing in philanthropy, investment optimization, tax strategies, and comprehensive retirement and estate planning. So I can't wait to dig in and see what Veronica has to say. I know money is a hot topic these days. I know personally I have clients that do very well, and even they're having to tighten the purse strings these days. So please tune in and listen. You never know what you're going to learn. So Veronica, welcome.
Thank you so much. Thank you so much for having me, April. It's a pleasure to be here. I'm really excited to dive into this conversation.
No, me too. So first thing I'd love to ask you, because not only are you a financial architect, but you're an entrepreneur as well, and you tend to work with female entrepreneurs, right? So one thing I find is that we women, especially driven women, are very multidimensional. You and I were just chatting before we got on that you have very young children, your mornings tend to be hectic, plus you have meetings, plus you're hopping on a podcast, right? And I think most of our listeners in some way, shape, or form can relate to that balancing act. So one thing I like to know is, what is maybe a pivotal story or moment in your life that sticks out to you that helped form this amazing woman sitting before us that can juggle all these balls?
Well, thank you so much. I like to say I got it from my mom, but it's a little bit of a bigger story. So I came here as a refugee immigrant with my mom and her parents in the early 90s. And so I was raised by a single mom, which is why I have a passion for helping other women. A lot of them happen to be single women, but not exclusively. I think that's just a passion of mine. And my grandparents, in case you want to know where all the fun dinners were, ran a mental institution in Belarus before we came here. We came here after the fall of the Soviet Union, which is my family and I are from former Soviet Union countries. And at some point, my grandfather was able to move a relatively small amount of money over to the United States. let's call it $40,000 was his like whole life savings that came over
Mm-hmm.
here. And he walked into a local bank branch and he spoke to the only Russian speaking advisor there and got really bad financial advice. He got placed into 9 different annuity products that were all really expensive with really low returns. It was clearly, now I know, a commission grab. But, I was like 7 years old when this happened. So it's not like I was involved. And at some point, I started working really young. When I was 14 years old, I was working at a Subway sandwich store. And a couple of years in, my grandfather was like, hey, can you take a look at all of these documents? I don't really know what I have, but the money hasn't grown. It's actually gone down since I did this, nearly 8 years ago or whatever it was. And so I took it to a social studies teacher of mine because, of course, financial literacy is not something that's taught in America at all. And, I had a social studies teacher look it over, and he was like, look, I don't know how to say this, but it looks like your grandfather may have been like a victim of elderly abuse or something like that by this financial advisor. And at first I got really angry about it. And I was like, I want to be a lawyer. I'm going to put bad financial advisors in jail. But my grandfather is just one of these people. And this is sort of like what has framed my essence of a being. Is his response to it was, maybe there is like a different way you can approach this. Maybe there are good financial advisors who help people, and you could be one of those instead of being angry at the world all the time. He's someone who's climbed Mount Everest and was a chess master champion and like is my hero in so many different ways. And, the thing is, when we went through immigration in America, there was a lot that was covered, including like basic English lessons and understanding how to sign up for, Medicaid or whatever that was needed at the time. But they didn't cover financial literacy. Like even through immigration, like it's a totally different banking system when you come here from another country, like how, or tax system or literally everything. None of that is covered. Just like thrown into work, like fill out this W-4 and like get it right, And so I got really passionate about like, based on everything my family went through and was able to, create, even despite the challenges, was able to create and come through. I really just wanted to help people not have to go through what my grandfather went through. I saw how sort of demoralizing it was to realize, you were taking advantage of, especially for someone who's like just genuinely a brilliant person and was, just took the advice of someone. He thought, if you worked in a bank, that meant you were a trusted person by default. And it's scary what's out there in the financial industry because that's very, very much not true. Just because just because you have a title doesn't mean you're necessarily a trustworthy person. And so all of that, going through that experience, the learning related to it, figuring out the financial industry at, 16 years old, figuring out, what's good, what's bad, that fiduciaries are a concept, why not every financial advisor has to be a fiduciary. It's just mind blowing, right?
Yes.
All of that. And that hasn't changed, right? So we're 20 years past that, more than 20 years past that, still the same financial landscape, right? And so, I think about, there's a family out there who, someone's just trying to do the best they can with whatever they have in that moment at that time. And good advice can make or break you. My grandfather had to work until he was like 82 years old. He didn't retire young. The money, maybe it would have helped. I don't know. Maybe it would have helped if the money had grown instead of losing money over that time period, right? And this was someone who gave him continuous financial advice for like whatever was going on in his life for some period of time too. None of it was great. And so, taken all into, consideration, it's like everyone I talk to is like, there's somebody who's my mom raising a kid on their own and trying to help her parents and get established, or they're my grandfather just trying to make the best of whatever hands were dealt in life. And a good financial decision could change the trajectory of a family, not just for like a year, 2 years, or 10 years, but for multiple generations.
Yeah. No, I thank you so much for that very honest conversation. I can relate to so much you shared. I was a litigator before a financial advisor, and when I would interact, a lot of, as the way you get a new client is often they come to you, they already have an advisor, you kind of audit what that advisor's doing, you see what their goals are and if it's matching up. And it's really disgusting what you see other people doing. And they're not always bad people. They just either don't have the attention to detail, don't know what they don't know. Like you said, there's different standards in the industry that most people are not aware of. And so there was a period where I was like, okay, when I retire from this, I'm going to reactivate my law license and go like sue these people that are like doing this. So I can completely relate to your rage for better or worse. Instead, I changed to like coaching and consulting and staying in the positive realm, right? So I can totally relate. And another thing you mentioned stood out to me, and I don't think that many people realize this, is that when you come to this country, our banking and tax system is so different. Thank you for mentioning that, because our tax system is so complex. Because my ex-husband was Italian. We lived in Italy for some time. We lived here, and he was like, and he was very intelligent, ran a business in Italy. He's like, I don't understand your tax system. Like, why are they, because in Italy, your salary is your after tax amount. Like, you don't even worry. The company just sends your tax in, and it's so complex here. And I share that because I knew one of the top tax advisors in the country, and he was like, April, I honestly wish they would simplify our tax code, because so much brain power is being spent on the tax code that could be finding cures for cancer and, all these other things. So let's, and then we'll go to fiduciary, but let's start there. Like, let's talk about the tax system, because I do think, most people don't understand until they're entrepreneurs or until they get into something else how complicated it is, right?
It is so, so complicated. You're absolutely right. And I think it's because there are actually multiple tax codes. I mean, there's one internal revenue code, but there are multiple tax systems in the United States, right? So if you have a business, you have one tax code. And as an employee, maybe even in your own business, that's another tax code. And if you're an investor, that's a different tax code that you have to worry about. And if you have children, you have a kid, that's a whole other thing, right? And so there are multiple tax systems, and oh my gosh, I wish they would simplify it, but all my CPA friends would probably tell me they have jobs because it's so complicated, right? You wouldn't need them if it was simple. So there's something to be said for that. But I think it's complex intentionally. I actually do. I used to not be as sinister about this, but I can't figure out a good reason that they keep it complicated, and as a matter of fact, make it more complicated over time. Like every time they pass a new law, it adds a layer of complexity to the tax system. And there are, partnering government organizations that you have to abide by. Like if you're a business owner and you have a retirement plan, well, now you have to look up ERISA rules that are half regulated by the IRS and half regulated by the Department of Labor. And it gets like, you could really lose your mind. And by the way, not focus on your business as a result of having to focus on being compliant with the tax codes. So I wholeheartedly agree. And I think it's so hard, not just for immigrants, but because, again, no one teaches you this. Everybody just gets like thrown into it when they're coming out of school. I think it's so hard to really, first of all, I think it's so hard to really get it. That's one. And two, to use it to your advantage. Like that's where you flip the coin. Like, to understand it to the point where it actually becomes an advantage to you, to your business, to your personal taxes. Like to get there, it is such an uphill climb. It's like your own Everest with like tax situation, right? It's like to get there is so much knowledge, so much brain power that you're absolutely right. Like all of the time people spend worrying about their taxes, if we all collectively did something else, we would be a much more productive society.
Yeah, no, I totally agree with that. And one thing I find is, I don't know what's going on, but it is extremely hard to find the right guides to help you through that in today's world. I mean, my dad was a CPA for 22 years, so I kind of grew up in that world before he became a financial advisor and a fiduciary. In fact, back in the day, the tax code was held in binders, right? So when they updated, you'd have to pull the page out and replace. So from the age of 8, that was my job. Like I would replace the tax codes. So I basically understood how complex it was from a very young age, just like experientially. But literally, when I had my Vixen Mastermind in 2023, we started the first retreat. Every single woman there was looking for a new CPA. everyone was unhappy with their CPA and looking for a new CPA, right? So, Veronica, I know you do it more on the financial advisory side, but you do help with tax strategies. So, like, what should our listeners be looking for when they're looking for help with their taxes? And like you said, and how can you take advantage of it? Because you can take advantage of the complexity and stay within the rules if you understand it well, right?
Yes, absolutely. So this is a passion of mine. I'm actually working on my master's in taxation because I find like
Excellent.
so much financial planning ties into tax strategy. Like,
Yes.
the more you know, the more you can take advantage of these things. And so, for guiding my clients, I'm just, accelerating that a little bit. But and even then, having been in this industry for almost 20 years now, I still, like, with my master's in taxation, I'm learning about, the international stuff and, little quirks that I never knew. So there's always something to learn. In either case, I do think the right tax advisor, similar actually a little bit to when you're trying to find the right financial advisor or the right person who's a good fit for you in almost anything, I kind of equate it to something a lot of people experience, which is finding a good doctor for yourself, right? How do
Yes.
you know that that's the right doctor? One is they don't have a one-stop shop in the box solution, right? So you don't want a doctor who just gives you antibiotics and doesn't take a look at you. The same way you don't want an accountant who's just going to give you, an out-of-the-box set of advice that they rinse and repeat all the time, right? Similar situation. The second, and I think this is true of women and why I love working with women so much, we have a good gut check, right? Our intuition.
Yep.
And I think a lot of it just has to go with personality fit. I do think accountants and financial advisors, to a large extent, you want to look for someone who specializes at least a little bit in your industry or your business structure at the very least, right? So if you have stock options, like, make sure your CPA has dealt with somebody who deals with stock options. If you're a
Yep.
startup who's looking to go public soon, make sure you're working with a CPA that has taken companies public. Not everybody has, right? Or has had that experience of what that looks like, or 83B elections and things like that. And so I think there are industry specific CPAs that become really, really valuable to that process. And the last thing I think is somebody who's going to not just prepare taxes. So nothing against tax preparers, but it is very different to be a tax preparer versus being a tax strategist. So if you're
Yes.
currently working with a CPA where you just like send them a whole bunch of paperwork once a year, they put your tax return together and then they send it to you for signature and tell you what you owe or what you're getting back, that's a tax preparer. If
Yeah.
you want somebody who's going to sit down with you at least once a year, by the way, and go through your books, your P&L, go through the different accounts you have. Hopefully you do this in conjunction with your financial advisor if you have one, by the way. Go through everything in detail and say, okay, these are the deductions or credits or pieces of the return I think we can work with. And the ideal time to do that is actually in the fourth quarter of the year, probably, because you'll have a good picture of what your first 3 quarters looks like, and you'll have a good sense of what the income and expenses look like. And the best time to do tax strategy is not like when you're filing your taxes. It's before the tax year ends, right? And I think a lot of people don't even think about their taxes until they have to do them. But that's why if you have somebody who's strategic in your corner, they'll be thinking about it for you. So proactivity, you want somebody like when the laws change and there's something that applies to you who's going to call you and say, hey, Secure 2.0 just came out. I know you have 529 plans for your kids. Just so you know, this and this and this, and the law applies to you. Like, that's the advisor you want.
Yeah. No, I love this so much. And I learned this in selling a business because we were structuring the sell of our business counter to how the industry did it. It was like a rare way to structure. And then I realized, okay, the financial advisors and lawyers don't fully understand this. Like, you have to find somebody who understands the structure of that business. And I mean, thank goodness, being a financial advisor and a lawyer, I at least know how to read things and understand, even if it's not my specialty. But yeah, it's very interesting. So I love that advice you gave. And also, I'm with you. Trust your intuition. I think especially for some reason, women often want to second guess themselves. Maybe it's a discomfort talking about finances, right? Or you're told you should do this, but if it doesn't feel good to you, trust your gut. Go find someone else. Like, you want to, anytime you talk about your money, I know this because I was on the other side of the table for 16 years, and I would be very careful to get to know my new prospective clients before we talked about anything financial because it's highly vulnerable, right? Like, you're talking about your money. There's a lot of emotional attachment to that. Do not feel guilty for that. Like, if it doesn't feel good and you don't feel they're listening and they don't have your best interest at heart, go find a new person that you feel better with. Like, it's really that simple. Wouldn't you agree?
Yes, I agree. And I actually used a word that I use all the time. If I use it a little differently, it says somebody who says you should do this. So I call that practice. And this is very true of my male counterparts in the industry. So when you're listening to this, just take it with a grain of salt. I call it shoulding all over you.
Yes.
So I hate when you talk to an advisor, because this is the worst feeling when you tell them, like, this is my situation. They come back with, you should do this, you should do this, you should do this, you should do this other thing. I call it shooting all over someone. And I think it's the worst practice because it takes away from what that person really wants to do. And so the way that I think people should work with any advisor they have, financial advisor, CPA, attorney, is in a collaborative way. So
Yes.
ideally, your advisor is the person who's filtering through all the things out there that you could be doing and narrowing it down to a few potential options and then collaborating with you on what feels best for you and not saying, I think you should X. Because to be honest, whatever I think as the advisor could be totally different than what either you're willing to do for risk tolerance reasons, you want to do for efficiency reasons, or could be contra to your values at a core level.
Right.
So like, my job is to be as collaborative as possible with my clients and not shit all over them by whatever I think is best, because I don't have the same view of the world as they might have.
Yeah.
And so the best relationship is a collaborative one where the client and the advisor are working together to make a decision. And it's not just the advisor saying, you should do this, you should do that.
Yeah, I totally agree with that. And you said one other thing that I really love that's a passion of mine, and it's that, your financial advisor should be part of the combo too. And I used to say when I did retirement planning, you have this trifecta of your estate planning attorney, your CPA, and your financial advisor. And if they're not talking to each other, something's falling through the cracks, right? And so you really want a team working on your behalf, number one. And I would always say, as your financial advisor, I'll be the quarterback of this team. But then the second thing is, a lot of times when you talk to someone who is a tax strategist, preparer, whatever you want to say, I find they're like in their tax tunnel. That's why bringing your financial advisor in is good, because they may not understand your holistic financial plan and what you're trying to achieve, right? Like, or like you said, what you feel good about. I know my tax strategist would always get upset at me because I had myself on a pretty high salary at my financial firm, and there were more tax efficient ways to be paying myself, right? But for me, I didn't care. My life was complicated, and I wanted to know that paycheck was coming twice a month when my employees came, and that it was covering my standard of living. And then I would take bonuses, et cetera, above that. And I understood I could pay less taxes, but for me, it wasn't worth the complexity, if that makes sense, right? Like, I just wanted that peace of mind that I'm getting paid. And, and that's why I think it's so important. And maybe if I had the right tax strategist, they would have simplified it enough that I could have won in both areas, but I didn't find that.
Yeah, I so agree with that. I think it's interesting when people have advisors that don't all communicate with each other. So
Yes.
I have a story on this. I have a client of mine that has, and she's a ultra high net worth powerhouse woman.
Mm-hmm.
She's amazing. But her whole thing is she wants separate siloed advice from her different advisors, and
Mm.
because she wants differing opinions. And that was her whole thing when she came in. She was like, I have two accountants, I have two attorneys, I'm going to have two financial advisors because I want opposite opinions, and then I want to be the decision maker. And so first of all, the brain power it takes to do that across all areas of your life, which is not like takes away from your focus. Like she has kids, takes away from your focus, your kids, the things that maybe you really care about. And I'm like, you know, you run a business. Why you need two different, you know, attorneys to give you input on estate planning documents? Like it's not necessary. And so what we did is we got everyone in the same room, all of her advisors.
Love it.
You made it clear that you have multiple people. Let's get them all in the same place. Let's just figure this all out together. And I led the path to, I'm like, we're going to have one meeting. It's going to take 1 hour. We're going to have conclusions at the end of this meeting that we're all going to collaborate and like walk forward on, because anything else is a waste of everyone's time, right? Like for me to spend time to come up with ideas, for her to then go run them against somebody else, whatever the case may be, I was like, this is madness. Like, and then she was so appreciative. So we do that twice a year now. I was like, keep the same number of advisors. You really want opposite opinions? Great. Like keep the same number of advisors, but don't waste your time, you know, being the messenger between everyone. Let's just sit down twice a year, all of us together. We'll hash it all out, and we'll come up with some middle ground solution that sounds good to you, you know?
Yeah, well, it saves you time. No, I love it. And it saves you time, brain power, and energy, like all critical components to your life.
And if you're paying all these people, especially the ones like attorneys often charge on like an hourly rate, right?
Right. No, I love that you gave the deadline that we have a solution at the end of this, because I coach on boundaries often, especially time boundaries. And I'm a big proponent of like, you have this much time and what's done is done. Like, let's go. Because you waste so much time conversing about things.
Yes, and the biggest thing is like we bring the whole thing to a boil. Like the meal gets made. We come up with like whoever's bringing the ingredients, the meal gets made. At the end of this, you're walking out with what's actually going to happen, because otherwise we can bicker, we can talk, we can collaborate, we can agree and disagree forever. That's not moving the needle. Like I need I need an outcome that moves something by at least 1% to call it a successful meeting. Because seriously, I mean, I think so much time, and I agree with you on this, is spent in unproductively, right? And if you're going to get two really smart, high power people or more in a room whose time is valuable, you want it to be as productive as possible, because anything else, you're just, you know, you're not optimizing your own value, your own time. And we only have so much time here.
Yeah, I agree. And, you know, miscommunication occurs. It doesn't matter how intelligent the people are you're dealing with. If you're taking one person's opinion and bringing it to another person and they have to interpret it, one, you're wasting more time. And two, they could totally misinterpret the advice. So miscommunication happens too often. I totally agree with that. One other thing I did want to touch on, because again, this is a passion of mine having been in the financial industry, is can you walk our listeners through what a fiduciary is and how they understand if their financial advisor is a fiduciary or not? Because this is critical, I believe, to success, and most people do not understand this concept.
Yes. So, and also because everyone now is calling themselves a fiduciary,
which
it's actually
is
very annoying to me in the industry. There are people who work for clearly non-fiduciary firms like broker dealers and insurance companies that are calling themselves fiduciaries because the insurance company went and created an RIA, and so sometimes they can put on a fiduciary hat. It's wild what happens in the financial industry. So what a fiduciary is someone who is legally obligated to do what's in your best interest without consideration for any monetary gain that they may have themselves. Meaning they have to put the client, you or the client first at all times and themselves on the back burner. The other side of the industry is something called a suitability standard, which means that any investment recommendation or any recommendation of any kind the advisor makes for you just has to be a suitable investment for you. So somebody actually said this to me in terms of like a good way to think about it is suitability means I get to sell you a suit. Fiduciary means I have to make sure it looks good on you too. If you want to think about it in a different context. And so it's really important when you're vetting an advisor not to just, take the word fiduciary, because everybody would like to say, I'm going to do what's in your best interest. Of course, that sounds great. But you have to look up the firm and look up their ADV disclosure. So there are two reporting agencies in the financial industry or oversight agencies, the SEC, the Securities and Exchange Commission, and FINRA. FINRA oversees primarily broker-dealers and insurance companies, and the SEC primarily oversees RIAs. So a good way to start is ask if they have a broker-dealer affiliated, if there's an insurance company affiliated, if they have any entity that's an affiliate or owning company or anything else that is a FINRA overseen agency. If they do, then they may not be a fiduciary at all times. Now, there's a lot of firms out there. The vast majority of firms have an RIA arm, Registered Investment Advisors. Our registered investment advisors are fiduciaries by definition. They have to act in a fiduciary capacity. And so when you think about who you want in your corner, you want someone who is going to put your interests ahead of their own. And further to that, you want someone who is not going to, take 2 or 3% off the top. You want that person to really, you want to keep your money. That's the whole thing. And so if you find somebody that has FINRA reporting, they're likely not just a fiduciary. Now, the problem with someone who is both, who sometimes is subject to the suitability standard and sometimes subject to the fiduciary standard, is you never know, and they are not required to disclose which hat they're wearing at any given time. So sometimes they could be wearing their fiduciary hat under the umbrella of the RIA, and sometimes they could be selling you a product that they receive a commission for under the hat of the broker-dealer, and they're not required to disclose which one they're doing at any given time. And it's honestly the travesty of this industry, because if it was structured the right way, and if our financial system worked in the interest of people, you would be required to be a fiduciary to give financial advice. Like, it's insane to me that that's not the case. But you have to remember, broker-dealers have deep pockets. It's not advantageous to them, the company, to do that, to actually give fiduciary advice. It's more expensive because then they have to go through the legwork of, first of all, they would earn less money because the commissions aren't as high. Second of all, or there are no commissions in the IRA space. Second of all, they can't, really true good fiduciaries have as close to an unconflicted model as possible, meaning they don't take gifts. So I'll give you an example. I worked for a broker-dealer for about 10 months, 10 miserable months, slightly less, in my experience. Around the time, actually, in 2015, when the Obama administration was looking to pass the fiduciary rule through the DOL, there were a bunch of broker-dealers who were hiring out of the RIA world to try and get people who had experience with it, but to help them meet the fiduciary rule, which in reality was help them look like they're going to meet the fiduciary rule, but not actually do it, which is why it didn't last very long. But the difference is, when I was in that broker-dealer, and it's just a totally different environment. Like, when we vet an investment product, we look for lowest expense share class. Can we do it any cheaper? Is there other funds that are even 0.01% cheaper that will do the same thing? And then and literally I worked at a broker-dealer for just a short time, but there would be, like, every single week there was something called a punch list on the wall. And it would literally be like, if you can get X dollars into this fund, you will win an all expenses paid trip for 2 weeks to Hawaii. You will get a $25,000 gift card. You will get a $30,000 bonus for putting money in the fund. Those are called soft dollars in the industry. That's the stuff you never see. And then, like, those brokers, so, like, Why is that position in your portfolio? Is it in your portfolio because it's a good position to have, or
Mm-hmm.
is it in your portfolio because your broker wanted an all expenses paid trip to Hawaii and was
Yep.
trying to get as many dollars into it as possible? And like, that's the part of the industry that, like, unless you see it every single day and you're exposed to it, you actually can't even wrap your mind around like how big and how much of an impact like that has. Because talk about incentives, like who's not
Yeah.
incentivized by that? I've seen them, like really aggressive fund companies really trying to get money into their funds, give away
Mm-hmm.
$50,000, $100,000. So people get cars, people get like all sorts of things that
Yeah.
this does not happen at a true fiduciary. It just doesn't. And, you know, like the amount of, you know, all expense, like tickets, dinners, you know, box seats, wherever in the world you want, as long as you're getting dollars into that fund.
Yeah.
And then as the customer, you don't know any of this, right? And so, you know, I worked on this horrible team, truly horrible team. And, you know, the lead advisor on that team would be like, okay, guys, we're dialing for dollars now. We have 2 more days to try to win a $30,000 bonus. If we all get this, we all get $4,000. It's like, you're selling your soul every day. That's the
Yep.
job. You're selling your soul, because if it's the only reason you're doing it is like for additional dollars, and like that's the thing, like all these clients, they have no idea. The
Yeah.
reason I didn't last was I refused to participate for whatever it's
Yeah.
worth. I was like, until I see a good fund, I am not calling anyone and
Yeah.
talking to them about it.
Well, and it's interesting because even in the RIA space, so we were under another RIA first. I was always a fiduciary from the beginning. But then I was like, okay, we're going to form our own RIA because we reached a certain level of assets. And then when I did that, I could go negotiate with the third parties and get the fees down for our clients, right? So, like, you just have so much more control. Of the cost and how you serve your clients when you do serve as an RIA. And, you know, it's challenging. We had the SEC come in and audit us the first year, and I was chief compliance officer and CEO, and you have to deal with that, right? Like, I mean, it's a lot more work when you do it the right way for your clients. And I don't think that everyone understands that.
Yes, it's a lot more work. The margins are a lot thinner. You don't
Yeah.
make as much. You know, there's or you
Well,
I would
but I'd
say
argue
it's
that over time it's more lucrative because it's a more sustainable model to keep your clients. And when you serve your clients, you don't have the turnover, right? So I hear you. Yeah, there's a huge difference in the upfront commissions versus the fee based, but in my opinion, it was more sustainable model and you got to serve your clients better. So your clients stay with you longer. So you actually end up making more money off that client, but because you're doing the right thing.
Yes, I agree with you. That I 100% agree with you. I think over time, yes, it's
Yeah.
extremely sustainable. I think it's hard when you're young and getting started in the
Yes.
industry. And this is what, you know, I'm one of those people, I always give everyone the benefit of the doubt. Because I see these portfolios all the time with these clobbered together, like A share and C share class funds and all
Oh,
of that, and
yeah.
this mishmash of things. And, you
So,
know,
can you
when I
pause
talk
for a
to
second?
advisors,
Because I'm sure that people listening don't understand A and C share. So, real quickly, just explain what you're chatting about.
yes. So mutual funds or fund companies, when they issue funds, they issue them in a number of share classes. And the difference between the share classes are the fees you pay and commissions, and therefore commissions that end up going to the advisor placing you in the fund, or potential loads. So loads are
Mm-hmm.
additional charges to get in the fund or out of the fund. So A share classes typically will have higher expense ratios and what's called a front end load, meaning you pay money or your advisor gets money and therefore you pay money when you get into the
Mm-hmm.
fund. So let's say something has a 5% load, you're putting $100,000 into, right away, the day you put your money in the fund, it's actually worth 95,000. And then it'll have a higher expense ratio because there's a commission paid to the advisor for putting you into the fund. C share classes, for example, have what's called a back end load, which means you pay money to get out. So if you have $100,000 in the fund, it's got a 5% load. You're only taking $95,000 of it when you go. And again, higher expense ratios. You want to be in something called investor or institutional share classes. That's
Mm-hmm.
your I share class. Those are good. Those are the original ones. Those fees are just the fees paid to the mutual fund company for managing the funds. There are no additional sales charges, 12b1 fees, commissions, front or back end loads. You want to be in iShares. So that's the biggest, so that's the difference. And so, you know, when I say people do the best they have with what they know, you have to remember broker dealers and insurance companies, and you may have experienced this in your career, extremely aggressive about recruiting kids on campuses. And more aggressive than others. They're all constantly trying to build their next sales team and make sure to continue, you know, their legacy of selling aggressively as much as possible. So they offer really attractive deals to kids on campuses. It's like a big thing. And people get into the industry. And the thing is, most people don't know. The same way I'm describing what a fiduciary is versus not a fiduciary right here on this podcast, it's not like because you're in the finance industry, you automatically know the difference. You
That's
know
true.
what you're taught. The reality is you start working. A lot of kids are recruited by these insurance companies or these big banks and broker dealers. They start working there and they're just taught, they think this is normal because they've never seen it done any other way. They think it's the only way to do it. And so, you know, I have these portfolio people come to me and sometimes they'll talk to the advisor and be like, can you tell me why in the world you did this? And they're like, well, I didn't know there was another option. Right. And so you have to remember, and this is why it's also really important if you're looking for an advisor, like check their qualifications and experience. It's good actually if they've been around the block, they've worked at different places, if they know other, like what's going on in the industry, if they can explain to you the difference between suitability and fiduciary, by the way, as you're shopping around. It's actually a good question to ask an advisor because I think how they explain it will tell you a lot about how they think about it too. You know, make sure they really know and they really understand like product, right? The concept of product. Why is that? How and why is the decision being made to recommend something? Or how and why they recommend a certain CPA even, right? Because sometimes people have arrangements where they get referral fees and kickbacks and stuff like that. That's all very prevalent in the industry. And I think people just don't ask enough questions. The majority of people still find their financial advisor by a referral from a friend. It's where the majority of my business comes from, thankfully, right? Is referrals from a friend and or an accountant or an attorney. And so you find somebody you trust. And then you're kind of just assuming your friend did the due diligence, right? Or, you know, a lot of people, they use their family's advisor. You're assuming your family knew the right question to ask. But just like my family came here and knew nothing. And so like, if my grandfather had never asked that question and just recommended me to the guy at the local bank when I started making money I never asked a question, right? Or I didn't know what to ask. We could have kept this cycle of bad financial management going forever.
I love it. So, Veronica, I know we're close to time. You and I could talk about this all day long, but I'd love to leave our listeners maybe with some tips, or I know we can't really give tips or advice over the airwaves, but if you could point them in a direction, because I do know you're nerdy about tax strategy, and that's the number one question of most business owners, but any guidance you can give on the best way to set up the business to optimize taxes? Or maybe a lot of times people are like, should I be an S Corp or a C Corp? Should I just be a solo practitioner? But any kind of guidance there that I think would be super valuable.
For sure. So there's some, quintessential basics, I think, which is make sure you separate yourself from your business as early on as possible. So establish the LLC, establish the bank accounts, establish the credit cards so that you're separate entities. You're not commingling. I know a lot of business owners love to run personal stuff through the business and vice versa, but try and separate yourself from it as much as possible.
Yeah.
And then as early on as possible, as soon as you're making money, you're taking a salary, start looking into ways, I call this ways you can pay your own retirement instead of paying Uncle Sam, which is, retirement plans. So the same way you have a retirement plan when you work for a corporation, like a 401k plan that people might be familiar with, you can set that up for yourself, like a solo or self-directed 401k. You can also do a simplified employee pension or a SEP IRA. These are all ways that you can mitigate dollars you're paying taxes on. And, you would just ask your financial advisor, your CPA for guidance on, what the right thing is to set up and the right way to set it up and run it. So just keep in mind there are quirks, like with ERISA. The second you have employees, whatever you do for yourself as a business owner, you have to do for your employees. So you can't just unilaterally advantage yourself in your own retirement, but there are certainly plans you can set up. For people who stay small, the country used to be built on pension plans. You work somewhere for 40 years and then you got a pension paid. You can actually set your own pension plan up for yourself from your business. So if you and maybe your spouse run a company, or if it's just you or you and your kids run a company, so it's all in the family, this becomes particularly attractive. But even if you just have a small business with a couple of employees, I think it's attractive too. You put money in, and then after you retire, after you sell the business, you get money out, or you do a rollover to an IRA, and you get to, recreate that pension situation that everybody used to work for back in the day. So I think that's great. And if you have kids, you can have your kids work in the business. So you can fund, minor Roth IRAs for them and get them set up and started early for success as well. So there's lots of different strategies. It's more about like being aware that there are things you can do at different stages of your business. Like early on, you're really just focusing on structure and optimizing cash flow. So, just an LLC that's flow through is pretty simple, but at some point, an S corp election is usually where people go next, because you can take a salary and you can take a distribution, and there are deductions that vary on each one. I think there's this little misnomer that people never want to take a salary when they're a business owner. There are advantages to taking a salary, including that you pay into Social Security, by the way. So you'll get Social Security benefits down the line. So I'm a big believer in taking a reasonable salary, which the IRS also wants to see. So they agree. So there are a lot of bits and pieces about it. I think it's just know that there are options out there, and ask if you haven't had a conversation with your accountant and you've been in business for a few years, kind of force the conversation on them and say, I need strategies to save tax dollars. Is there a way I can, reallocate to my retirement money that I'm paying to taxes now?
Love it. Thank you so much for that. Today was awesome. I'm so happy to have had you on. And just wanted to ask quickly, first of all, to clarify, I know you're based in New York, but you have clients across the country, correct?
Yes, I do. I'm all over the place. So I have clients across the country, and I travel too. So I'm very fortunate that I'm in New York, but I have a big chunk of my family that lives out in California and Florida and different places in between. So I always feel like I have someone to visit when I go to see clients as well.
I love it. And Veronica, as we're wrapping up, is there anything else you'd like to share with our audience? Before I invite you in there, I'm just going to remind the audience, all the pertinent information about Veronica is in the show notes. I know that many of you don't read the show notes, so here's an easy way you can get the resources and how to stay in contact with our amazing guest. You simply go to vixengathering.com/podcast and subscribe. And every Tuesday and Thursday, all these amazing resources, guests, their contact, etc., shows up in your inbox. It's really that simple. So that being said, Veronica, what's a simple way, if someone's listening saying, oh, I need to talk to this woman, for them to get in touch with you? Anything else to share with our audience before we go?
Sure. So the easiest way to get in touch with me is directly through my website, veronicakaras.com. You can also send me an email, veronica@veronicakaras.com. I try to keep it as simple as possible. And I would love it, if you've been working with somebody for a really long time, you're not 100% sure that everything is optimized, you just want a second pair of eyes on it, I'm more than happy to give a second look to anyone of what they have going on. I am a fiduciary, so I've got nothing to sell. If you're doing everything right, I'll tell you that you're doing everything right. But I would say at least once every 5 to 10 years, get a health check, get a sanity check. The same way sometimes you get a second opinion from a different doctor. Get a second opinion on your finances, especially if you've been doing the same thing with the same person for a long time. Just have someone else look over it, whether it's me or another really good fiduciary. But I'm happy to be that person. Just lend a second pair of eyes.
Love it. Thank you so much. So, Veronica, we chatted a little bit about you being a mom at the beginning. So, most of our guests are women. And as I said, we're multidimensional and different. I always love to ask, when do you feel, I know the work you do is very analytical, very linear, male dominated. And I love that you talked about using your intuition because that's more of our feminine essence, right? So, when do you feel you're most feminine? When do you feel that feminine energy flowing?
Oh boy, that's a loaded question. I grew up ballroom dancing, so my answer always
Love
is
it.
dancing. When I am
Aw.
dancing, that is when my feminine energy is flowing. I don't get to do that much of it these days, but actually, my husband for our 7-year anniversary we took a ballroom dance lesson, and it was so much fun. And I have to say, if you need a good activity with your spouse to sort of let loose, ballroom dance lesson. I'm putting it out there.
Oh my gosh, I love that so much. And what color is your feminine energy?
It's purple. I wear purple all the time. I'm a big fan of purple, actually, and I love it absolutely. And I think, look, everybody's got masculine and feminine
Yep.
energy within them. And I have to say, I do think actually women do finance better than men, even though
Yes.
there's 15% of advisors out there, still only 15% are women still. I do think women do it better. And I think there is something to be said about getting to know someone's financial life, their goals, their objectives, what they're looking to
Hmm.
accomplish, the impact they want to make on the world through more of a feminine lens, because I think that lends itself to better decision making.
I agree, and that's how I ran my practice, and the men are attracted to it as well. So I love that. Thank
Yeah.
you, because I really, and again, we're out of time, but it's a peeve of mine that like there's the same number of women as there were 12 years ago in the financial industry, and I think it's because, as you said, the broker dealers, etc., operate more in a masculine energy field because we all do have masculine and feminine, and we should balance it. And I feel it's burning women out when they have so much on their plate,
Yes.
right? And I love that you're a beautiful example. I'm very passionate that the financial industry is a great place for women because guess what? You can see clients from 8:30 to 3:30 and then you're there with your kids after school. Like if you are a fiduciary and you're independent and you run your own business, I think it's an amazingly abundant career for women. So thank you for being on and being an example of that. I'm very passionate about that. So I'm glad you went there and touched it. I talk about those stats all the time. So I love it. So thank you so much for being with us, Veronica. Any last words for our audience? I like to do like a parting message.
Thank you so much. I really appreciate you having me on and spending the time. I agree with you 100%. So I'll leave it actually with, if you're looking for a mentor who's a woman in the industry, because that's what was extremely lacking for me as I was growing up. All my mentors were men in the industry. And
Yes.
so I pivoted to masculine first. But if you're looking for a women mentor, you're passionate about helping people, I always say I have the best job on the planet because I help people make their dreams come true. If that resonates with you in any way, I would love it if you just reached out to me, and I'm happy to help anyone and any woman who feels like they're burning out in the industry. I will find a way to help you stay in the industry because I agree. I think there's a way you can do it right and in a way that
Mhm.
creates amazing balance with work, life, kids, and everything in between.
I love it. Thank you so much. And for everyone listening, I always say the world needs more love. So I'm going to challenge you. How can you show up more loving? And Veronica, by the way, I see Outlander back there too. And I've read all the books. Huge fan. Way back in the day before it was a TV show. So anyway, I love what Veronica shared about being a mentor to other women. So maybe think over the next week. That's how you can show up in love this week. Is there someone in your industry? There are a lot of young women searching for mentors. So can you show up, show them love, show them the beautiful part of what you do and really share. So thank you for that inspiration, Veronica. And for everyone listening, I'll talk to you soon. Have a great day. Thanks again for listening to the podcast. If you enjoyed today's episode, be sure to hit subscribe so future episodes are automatically downloaded directly to your device. And if you want access to today's show notes, including links to all the resources we mentioned, visit vixengathering.com/podcast. Thanks again for listening, and I'll catch you next week for another episode of The Vixen Voice.